afternoon. Welcome to Bloomberg Quint Live. You're watching Trendspotting. I'm Shraddha Babla. Good morning, Agam.
Good morning, Shraddha. I'm Agam Akil, and in the next 30 minutes, we deep dive into specific trends in the markets to draw our key takeaways and the implications. First, the headlines. Indian markets maintain momentum. Nifty trades about 10,750. PSU banks and drug makers weigh metal support broader markets in line. And the Munjal and Burman may have the last laugh in the race for Fortis Healthcare Board chooses their bids over the others. Asian Paints jumps almost 6% in early trade, hitting fresh lifetime highs after the paint maker's profit rises for the third time in a row in March. And Bharti Airtel and Idea Cellular slump in trade after Reliance Jio launches a new postpaid plan.
Right. The Nifty and the Sensex are back to their opening levels after that small dip that we had seen in the early trades. The small cap index, of course, tracking the benchmarks. The broader market breadth, however, remains equitably distributed between gainers and losers at this point in time. I want to point out some of the metal names which are doing really well. Hindustan Copper, JSPL, of course, in the back of earnings. Hindustan Zinc, all of them are seeing sizable gains in trade today. But what else is doing well, Agam, is Asian Paints and Nestle, which have hit a record high. This is clearly to do with the earnings. And this is a reaction despite the kind of run-up we had already seen in some of these names.
Absolutely, Shraddha. They've been going from strength to strength. There's no doubt about that. As you rightly mentioned, that they have been hitting lifetime highs right now. Both of them seen steady growth coming in as far as top line is concerned. Essentially, in case of Asian Paints, of course, it's largely the decorative segment that has led the growth. But for Nestle, it's not just Maggi anymore. It is the other segments, and particularly the premium segments, which have started doing well for Nestle, and that's the reason why we're looking at that growth coming in, that growth figure of double digits coming in. Domestic figures specifically very good and panning out for Nestle, inching towards 10,000 for now. So good numbers coming in for both.
Well, and what is under pressure is the telecom companies after Reliance Jio announced a new postpaid tariff of $199 per month. Jeffrey says that they expect the incumbents also to follow this, and that would really mean a further decline in the ARPUs for Bharti and Idea as well. They remain cautious on the sector. Morgan Stanley says that if every 10% of the postpaid subscriber base of Bharti Airtel was to shift to the new lower tariff plan, India wireless revenue for Bharti Airtel will take a hit of 1% and EBITDA would take a hit of about 3%. So that's telecom stocks, Idea and Bharti, both under significant pressure. But let's tell you what we have lined up for you on Trendspotting today. First, what aided Mphasis strong numbers? We will ask the CEO Nitin Rakesh and the CFO V. Surya Narayan. And then we will decode the fourth quarter numbers for Magma Fincorp as we connect with the CFO Kailash Baheti.
All right, so let's get to it. We have Mphasis, which is again also hit lifetime highs today, and it's jumped as much as 10% for now. And this is after, of course, it's reported very strong numbers coming in. What are the key factors and what are we expecting for the upcoming financial year? We're in conversation with the management, Nitin Rakesh, who is the CEO, as well as the CFO, V. Surya Narayan. Guys, thanks for joining us. Nitin, I'm going to start off with you. Can you tell us about the deals that you've signed? And as we understand, is new generation, which contributes to over 80% of the revenues, is now in focus. What kind of implications can your new deals that you signed in the fourth quarter have on the upcoming financial year?
I think consistently now 4 quarters in a row we are starting to see 80+% of our new wins coming from what we call new gen services. What that basically means is we are applying some form of transformation to our clients' businesses. In many cases, transformation that starts in front of the customer, so customer-centric, deploying consumer tech, looking at analytics and data to drive personalization, starting to look at how we drive a higher percentage of cross-sell. And at the same time, how can we actually help them transform their core systems and operations? And that has an element of cognitive automation, transformation, cloud migration, and all of those. So I think from that perspective, this continues to be a high growth market. This business has actually grown almost 50% on a YOY basis. 43+% of our direct core business now comes from next gen services. So I think this is really the right kind of growth in the right areas with the right momentum.
Surya, you raised your targets for margins for FY19 to 15 to 17%. What are you factoring in when you have raised these targets when it comes to operational performance?
Right in FY18, we had initiated various steps to improve our margins, including productivity and business model into fixed price, etc. And these are all playing out well. And as you see, you would have observed quarter on quarter, we had increased the margins, EBIT margins. And so we are confident of the new revised band of EBIT for FY19 between 15 to 17%.
And Nitin, what kind of work are you carrying out for HP and DXC now? What kind of projects are you working with them?
We called out this time last year the fact that we were going to use the long-term agreement and our partnership to essentially catapult us into a different positioning. And from that perspective, we announced a partnership for application transformation, cloud migration with DXC. We are very pleased with the results of that partnership. I think we've created a tremendous amount of value for both companies. And that was the reason why we were able to grow that business in healthy double digits over the last 12 months. We think there's a long-term opportunity in continuing to drive application transformation, as well as what we call core service transformation. We saw good uptick in the US with DXC. We started to expand that to other regions of the world. At the same time, we still think we have a long-term mining opportunity with other HP entities, most notably HP Enterprises and HP Inc. And we think we should continue to make investments in growing that through the remainder of this year and next.
Surya, what kind of investments have you earmarked for the upcoming financial year? The reason why I ask is that if you have also upped your margins guidance for this FY, in that case, will your investments not have any bearing whatsoever when it comes to your return ratios?
The services we render, especially in the new gen, requires a lot of investments in-house for platform on the digital side of the business. So when we have, advocated the margin band for FY19, we have factored these investments.
Nitin, we were in conversation with a lot of your other peers, and there is still a lot of talk about a lack of visibility in the banking financial services. People are still trying to figure out what they exactly want. How are you reading your business in this particular vertical right now?
Most of the growth coming out of banking will not be in traditional IT, but it will actually be more in transformation or digital new gen services. Because almost every bank that we know of has a highly optimized back office core IT business. However, they're all trying to stay ahead when it comes to investing in front of the consumer or in creating services and offerings that are highly customized. So I think there will be a long-term growth opportunity in digital and next-gen services for banks, as well as financial services companies. But if you have those services, if you have the ability to help, partner with them, help them deploy consumer-facing tech, help them adopt digital transformation that starts in front of the customer, then you will actually see good growth. And that's kind of what's happening with our business.
In this particular quarter, there's also this trend that while there has been slackness in America, there has been a lot of growth in Europe. And we're seeing this across the Indian IT industry in general. What sort of conversations are you having with your clients in Europe specifically?
In innovation, adoption is higher on the other side of the continent in North America. And that as that starts to mature and starts to get scale, there is a fast-following approach in Europe. And even within Europe, the approach is very different in different markets. UK is very different from continent, especially Northern Europe is very different from France. So I think it's not one size fits all in Europe. So for us, our European strategy is very, very country-specific. But at the same time, I think the global themes are pretty consistent and common. And the themes really being to avoid disruption that is coming from tech, you have to continue to invest in front of your consumer in enhancing the customer experience and personalization.
And Nitin, what about the challenges with respect to direct international, specifically digital risk? Because we've seen the company, should I say, struggle with this particular area. How is the company addressing some of these issues?
I think we've done two things. We used most of FY18 to stabilize our profitability profile actually to stabilize our top line and improve our profitability profile. So we're very pleased with the fact that we've gone from mid-single digit to low teens in EBIT number. And from that perspective, I think the opportunity is pretty interesting for us to now focus on how can we leverage the client relationships we have there, how can we actually synergize, and for that reason, we've also announced a one Mphasis approach where we are taking a customer-centric go-to-market versus a unit-centric or a division-centric. So we do believe there is opportunity in those customers. We just have to continue to find ways to win a higher wallet share, something that we do very well in direct core, so we want to replicate the same with TR customers.
Surya, a word on your expectations on margins. What are the possible challenges that could actually challenge you being able to sustain these margins, that the ones that you have predicted, and what are the potential adversely impacting factors out there when it comes to margins going in?
So as you are aware, we follow a very consistent hedging policy. Our hedges for FY19 have already been done and they are already displayed in our MD&A. And yes, the dollar-rupee movement has some impact on our financials, but that is marginally considering the fact that we are fully hedged. Beyond that, apart from any very one-time exceptional issues which can come, we are quite confident of the EBIT margin which we have laid out for FY19.
Okay, Surya and Nitin, thanks for joining us and giving us an outlook on Mphasis in terms of what we can expect for the upcoming financial year. So it certainly has been a good quarter. There's no doubt about that. But investors are, they seem to be happy about the fact that the company has actually upped its margins guidance to 15 to 17%, the best so far that the industry has provided for. So that's also the reason why it is currently trading at lifetime highs, up as much as 5.5%. But what about Magma Fincorp, Shraddha? How's that been?
So Agam, apart from it being a good quarter for the company, what has also happened is that we saw a lot of change of hands as far as institutional investors are concerned in a block deal yesterday. They've also had their QIP recently in April. And when it comes to the quarterly numbers, of course, they saw a strong profit of 72 crores for the quarter versus the huge loss that they've seen in the corresponding quarter previous year. So just to understand what's happening with the institutional investor side of it and what the road ahead for the company looks like, we are going to be joined by the Chief Financial Officer, Mr. Kailash Baheti, with us now. Good morning, sir, and thank you very much for joining us. I understand that one of the big investors, Zen Mauritius, has sold 3.9% stake in the open market yesterday. They'd also sold some stake previously last month. And if I am correct, the Zen nominee had also resigned in April. So are they looking to completely exit? And apart from that, some of the names that we had seen investing in your QIP have managed to buy the stake that Zen is selling. So just want to understand what you're hearing from Zen Mauritius and what are the large institutional investors saying at this point in time?
So you see, Zen Mauritius, which is a KKR entity, and KKR, jointly we are owning about 16% of our equity capital, and they had exited partially in the last month, and with yesterday's sale they have completely exited. In fact, they had invested in our company almost 7 years back, and every institutional investor or PV investor will have their end of cycle for a fund. So that's the reason, as we understand, that they have exited, and they have exited completely.
All right. So have you also happened to speak with some of the other investors who have actually come in? Even after the QIP, it saw a wonderful response. So, what are the concerns of some of the large institutional investors at this point?
I do not think there are any concerns of any large institutional investors at this point in time. In fact, yesterday, the deal details which are available on the stock exchange site, we see that 4 of the investors who had invested at the time of QIP at a lower price have actually further bought shares at somewhat higher price.
Fair enough. Yeah, that is what I was actually trying to understand. Not their concerns, but what they're looking out for and what are they talking to you in terms of growth prospects. And that's something that I also wanted to understand. While your entire focus in FY18 was on stabilizing asset quality, I believe now that focus will shift towards growth, at least in FY19 now.
Yes, absolutely. You see, for a few years, we have been facing our problem of NPAs, and in the process, last year we had sold NPAs of about 680 crore rupees and had taken a one-time hit of about 145 crore rupees at PAT level. And at the beginning of the year, we had said that we are largely done with our old NPAs. And the new book which we are underwriting is significantly better than what we had underwritten earlier, and that our NPAs will be substantially lower during the year. So during the year, as you would know, we have moved to 90 DPD provisioning. Earlier we were at 120 DPD provisioning. So if I do just a like-to-like comparison, last year our NPAs at 90 DPD would have been 8.8%, and from there we have now moved to 7%. And our NNPAs, net NPAs, last year would have been at 7.5% at 90 DPD, and we have moved to 5.2%. That's a reduction of 30% over the year. And mind you, this is not a reduction due to any denominator impact, because our denominator has more or less remained stagnant, or there is a slight reduction from 16,101 crore rupees to 15,555 crore rupees. So in spite of there is no tailwind being from the denominator, our NPAs have reduced by 30%. That's significant reduction. Going forward, and you have very rightly said that our until now our focus was on NPA reduction, and now our focus shifts to growth. And I would like to give one more data point, that we track our portfolio on the basis of a very scientifically designed early warning indicator, and our entire portfolio which we have underwritten in past 2 years is now showing significantly healthier position than the NPAs than the portfolio which we had underwritten in past, and therefore we are quite confident that this trajectory of reduction in NPAs will continue, and therefore we have now shifted our focus back on growth. Last year our total disbursement year on year had a small 8% growth, but in the last quarter our growth was about 51%. We have three businesses: vehicle finance business where we grew 58%, our mortgage business where we grew 23%, and SME business where we grew 41%. Overall 51% in the last quarter.
That's correct, sir. So I understand that FY18 also had a demonetization base, but Q4 disbursements really show how lending really has, demand and lending has picked up. But going ahead, and we do understand that rural sentiments have picked up, and this is what a lot of other managements and companies lending to rural areas have also spoken to us, have said. So what is the kind of AUM growth that you believe you'll be able to do in FY19?
So our internal target is that we would grow our disbursements by about 25 to 30% during the FY19, and which should lead to a AUM growth of about 15 to 17% for FY19. All
right, so that is including the impact of both the low base and the fact that rural sentiments have started to pick up. You think you'll be able to do about 15 to 17% AUM growth?
That's right.
Okay, earlier, just one more clarification. Earlier, there had been rumors of a possible exit of your German partner HDI Global from the insurance JV. Any such development on the anvil?
So we had at that point in time also put on an immediate statement saying that there is no such discussion right now. And HDI and both the partners are solidly backing the management, and that's the stand. The same thing I have to say today.
All right. So overall, what's the plan going ahead for the general insurance business?
And staying on to right. So in the general insurance business, our last year AUM, there we say gross written premium So last year it was 423 crore rupees of business which we had done. Last year means FY17. In FY18, we have done business of 560 crore, which is a growth of 32.5%. And going forward in the next year, we have planned a growth of more than 50% over this 560 crore business which we have done in the last year. The business is doing exceedingly well, and all the lines of business, whether it is motor or corporate or liability, or we have newly launched health, we are finding that there is growth in each business, there are opportunities in each business, and we feel that there would be significant growth in our insurance business next year.
Okay, Mr. Bhatti, we leave it at that. Thanks for joining us and giving us an update on the company. But moving on to, well, the big news of the day, the takeover battle for Fortis Healthcare gets to the next stage as the board backs Munjal and Burman with the winning take. And as you can see visuals on your screen out there, we have the management of Fortis just coming up, getting ready to speak to us with respect to the latest development with respect to the Munjal and the Burman family. That said, before they can begin, we also have Darshan Mehta joining us. Darshan, anything that you'd want to add, any updates here?
Yeah, so basically, as of now, we don't know whether this is the final bid or no, because they will need to tell us what happens if they get a counter bid or something. So that's what I want to understand. Mainly, I want to understand what their rationale is, because they have said that we've accepted this bid, but they haven't given any rationale of why this bid and why not the others. And what
just to introduce myself, I'm Brian Tempest. I'm an independent director on the board of Fortis Healthcare. I chair the audit committee, and since early this year, I have also chaired the board meetings. We had as you know, we've been going through a process, and I'd just like to give you the feedback about that. We believe that we've had a very, very healthy process in order to determine who should be the right bid to accept, and it's involved a lot of inputs from quite a number of different parties. And in fact, we started the board meeting yesterday morning at 7 o'clock, and we finished it at 10 o'clock at night. So we actually had quite a mammoth board meeting, and when we concluded, we had, as you know, a majority decision, and we were pleased to announce that actually the Burman and Honda family have, Hero family have actually been awarded the bid, and this is what is now being recommended to shareholders. So that is the situation, and I imagine you've got one or two questions, so I'm quite happy to take those.
Can you explain to us, hi, this is Mehta from ET now, can you explain to us that after this marathon board meeting, why is it that you have chosen the party that you have chosen over the other four suitors, even though this party may not have that much experience in healthcare, does not run hospitals, maybe barring one in Ludhiana, and they may not have been the highest offer as well on the table?
Well, we looked at all the different binding bids from the point of view of certainty versus risk, and we looked at them from the point of view also of liquidity for the company. And as you know, we took the advice of an expert advisory committee that had got two eminent gentlemen that were on it, who were able to give us some good advice. We also took the advice from two financial organizations, and also we took advice from a legal organization as well. And when we took all those elements together and we evaluated the four binding bids that we reviewed, the one that had the majority support was the Dabur and Hero group. And you mentioned that they don't have any healthcare experience. In fact, I think they've got over 30 or 40 investments in healthcare.
But not hospitals, barring one hospital in
Correct.
Ludhiana.
Correct.
One thing having pharma products,
Correct.
another running hospitals.
Correct. They have one hospital, and actually it is also one that actually has a nurse training college, and it also has it's a training hospital, And one of the issues actually when you run a hospital is making sure that you have a good supply of well-trained nurses and doctors. So there is a synergy there as well. But you're quite right, they don't have as many hospitals as perhaps some of the other parties that we've been dealing with. But from the point of view of certainty and risk and looking at the liquidity flowing into the company, we felt that was the best decision.
Why is that? Look at Manipal, it has experience, it has all the qualities you mentioned, and it was putting double the money of the equity infusion into Fortis. So can you explain to us what one Munjal firm paid over the Manipal TPP?
Well, I don't intend to go through each individual bid and give the benefits of each one and versus some of the other ones. In fact, it proves it doesn't. We don't really need to get into those individual details. But in terms of the four that we looked at, certainly the Manipal deal was not one of the favourites across the whole of the selections. But we looked at them, as I've said, through these different yardsticks. We also had to make sure that there was that the private equity players in SRL were taken care of, and we also had to make sure that there was the RHT acquisition, which we committed to. But all those elements we were satisfied with, and also we feel that, and I keep coming back to it, certainty and liquidity were important elements. Remember, this process started 2 years ago. There were some of the parties that came in front of us had actually looked at over 300 different modifications. And it is important for the shareholders, for the company, for the doctors, the staff, and for the patients in this hospital and every hospital of Fortis that a decision is made for the good of everybody. And we have deferred and gone through this extended process to make it as transparent and independent as possible. And that's where we got to at the end of 15 hours last night. Sorry. One question at a time. Sorry.
Which offer did the external advisory panel recommend, and how many board members were in favor of the mutual government offer? Who were they? And the new members were opposed to mutual.
Okay. Well, first of all, I don't intend to go through the individual advisors and what their advice to. No, the external advisory. I don't intend to go through each individual one. But all I can say is it was very useful what they gave to us, and they were very, very eminent people involved. So it was an important part of the decision, but it was just a part. He asked for a second question, which he was asking about how was the board, how was the place of different people on the board and that sort of thing. Well, as you know, on the board we have 3 members that have actually got a lot of experience with Fortis and so on, and we have about 5 that actually have been appointed in the last couple of months. Of those 5. 2 voted for the Hero Mundal option, and 3 voted for another option. And so you had the mixture of the 3 that were, if you like, well-knowledged and understanding of hospitals and the history, and you had some of the new people that led to the majority, and then some of the other new people were looking at another option, but after 15 hours we had to make a decision. So that's the way we left it.
So what happens to the SRL board now?
I'm sorry.
What happens to the SRL board now? Because the Singh brothers are still there, and will that board also be restructured? What happens to Singh brothers?
Well, first of all, with respect to the Singh brothers, we've requested the resignation of the Singh brothers from the SRL board. I think. I last wrote about 3 or 4 days ago requesting the documentation. In terms of what does happen in terms of the SRL board after now this process has been decided in terms of the Dabo Hero group, I know that they would like to sit down with the SRL management and understand that business more. So I think you have to talk to that party now in terms of the future of SRL, but certainly they have a couple of different scenarios, but they wish to talk more with the SRL management.
When you say certainty, what do you mean? What do you mean when you say certainty?
Certainty, I mean that actually there is going to be a certainty that the funds will flow into the company and not be held back by some issue that could be generated in the process. So it's important that there was a clear process that would lead to fluidity and liquidity for the company.
Brian, this is Chetan from Business Television India.
Yeah.
So when do you expect the deal to be cleared, and do you think the shareholders' nod is going to come easy? And post this infusion, do you think you would be needing another round of infusion as well?
Well, first of all, I think that the shareholders' meeting will probably be in about 30 days. And I would imagine, because of the real status of these two families, that there will be a lot of support from shareholders across the company. I've in fact received already emails from shareholders congratulating me on the actual result. So I think that that there will be support for this in 30 days, and I think that you know, that will be very positive, as I've said, for Fortis and the shareholders of Fortis and the staff of Fortis and the patients of Fortis. There was a second part of your question. I can't.
Another round of infusion.
Well, I think you've got to you know, sit down with the Berman and the family and talk to them about actually where they wish to go in terms of the next infusion. But I mean, you've got to talk with them in terms of their aspirations. But you can see already that there is a significant amount of money that's going to flow into Fortis. It's going to flow in very quickly, and there is certainty that this company will be back on its feet and will be in a strong position very quickly, and that I think is very important. You know, you've heard me say this in the past. I would like the management to be focused on improving the performance and the results of the hospital business, and not be spending their time working on dealing with banks and loans and that sort of thing. They're much better working on the efficiency of the hospitals, and that is what the board is very keen on doing. We've looked at these different scenarios long enough, and we made a decision.
Mr. Tempest, so with regards to SRL, one of the offers in one of the clauses in the Munjal Berman bid was that they wanted to sell SRL, possibly to fund the RST acquisition. Will that be happening now?
Well,
especially considering that they'll be having just 17% stake after the acquisition.
You're quite right in your observation, but I do know that they wish to sit down with the SRL management and decide which is the best way forward. So they have shared with us that that was part of that, but they do wish to sit down with the SRL management and understand it better.
Mr. Tempest, you know, there's an EGM on the 22nd of May.
You're quite right.
And, you know, shareholders in the past have essentially campaigned to get rid of at least 4 directors who voted for this deal.
You're right.
Now, do you actually see shareholder angst trying to force a hostile bid further on, or do you see that settled now?
Well, no, let me ask that question. Let me answer the question. You're quite right. There is 2 shareholders which have over 10%, and they have requested an extraordinary general meeting, and it's scheduled for the 22nd of May, and they have put up for vote 4 existing members of the board. I think I should also draw to your attention that one of those members of the board last Friday also faced the shareholder vote and was re-elected by the shareholders of the company. If you just check, you'll find last Friday there was one of these directors was re-elected. So we believe that the overall shareholding body will actually re-elect the existing members of the board on the 22nd of May. But the 2 shareholders are important shareholders. They have a significant shareholding in the company. They're within their legal rights to request this, and we're going ahead with it, and it will take place on the 22nd.
Second part of my question, how confident are you that there won't be any hostile bids further on?
Well, who can tell what is going to happen in the future? You know that the world is full of opportunities and threats, and you never know what is going to happen on that front.
Dr. Brian, once again. So, you know, a lot of money from the Munjal offer comes through preferential route, which will take some time before Fortis gets hands on it. And while other offers were having direct infusion, so what scores So what is the current cash need of Fortis on day one? And will you, given the time frame of money inflowing at the preferential through the preferential route, do you think that the current cash situation you will be able to sustain through the current cash?
Well, you see, I think part of the cash situation has been an overhang from the story around the promoters in terms of what is happening, or the ex-promoters in terms of what is happening with them, and therefore some of these bank lines have actually sort of dried up. I truly believe with the two names that are now associated with Fortis, this situation will be changing as we sit here actually in this room, and I think that there will be a change in the way that the banks will be dealing with Fortis very quickly. So I am relatively confident that actually those issues are will now be behind us. But you're quite right, there is a certain time delay, but I think there will be a response from some of the banks and there will be support coming from them.
And Brian, it's me again, Nandara.
Yeah.
I have to ask you this question. There have been allegations of perhaps not the best of corporate governance standards at Fortis. We've all seen those media reports where there's alleged siphoning of funds or quarterly results not being signed on by Big Five, not Big Four. But moving on from that, you've also seen a change in board that has taken place. Board members whose removal was being sought had set up the advisory committee. One member, stalwarts like Renuka Ramanathan stepped down from it. Talk to your shareholders, talk to the analyst community. How can you say the best of corporate governance standards have been followed by Fortis, even when it comes to deciding the winner, when you yourself had conceded it was not unanimous and that there was a division?
I'll tell you why, because I'm chairman of the audit committee, and this allegation that came, I think, on Bloomberg, it came on, I think, the 7th of February. Just to give you a flavour, I happened to be in India on that day, because I do live in Europe, and the 8th, I called a meeting of the management and asked them to give me an assessment, an investigation of that. By the 13th, which was the end of the week, they'd done an internal investigation and they came to me and said there was no illegal activities against this Bloomberg allegation. And but that wasn't sufficient for me in the audit committee or the audit committee itself, and I specifically requested that Luther and some lawyers get brought in to check this internal review and to make sure that actually it is challenged and thorough, and they're now doing total forensics to give us an answer. And that is going on at the moment. We won't know for a few...
You sold the company before the forensic audit.
Everybody knows that. And so the forensic audit is coming in, and we're expecting to get a result, hopefully in May, which will declare, what was the situation within the company. But so far, I am not aware of any illegal activities. I think there may be some procedural things that we need to put right, but there are always procedures that you need to work upon. We have a very thorough audit committee. You should see the internal audit reports that are about that thick, which we go through every quarter. But in terms of this particular issue, you need to remember that it was the audit committee that briefed the lawyers, and now everybody who's investigating Fortis is very keen just to sit back and wait for the Luther report, and then we will see what it says.
And the second part of my question.
What was that?
How is it that people whose removal is being sought are deciding the procedures and have decided a winner when you yourself conceded it's not a unanimous decision?
Well, as I mentioned to you, of the 4 that are actually being challenged at the next meeting, 1 was re-elected last Friday. That gives you a flavour of the sentiment of the...
Did you check the board yesterday as well?
No, yesterday that was just there was 2 people who we were actually just formalising. They've been on the board since a month or so, 2 months maybe. So that was just a formalisation that came through the board meeting. Yeah.
Dr. Tempest, this is Rajiv. I have 2 questions. One is about whether any part of this transaction entails any funds going into the Singh family's holdings, and second is, I may have missed the first part of the meeting. I got stuck in traffic.
Okay.
What was the ratio in terms of majority at the board?
Okay. Well, all the money goes into the Fortis company, and you've seen that. It's very clear in that. In terms of what I mentioned earlier on, I've already answered the question, but I will just clarify it. In terms of the board, we have 8 people on the board. There are 3 members of the board that actually have been with Fortis for a fairly long time and understand the hospital business and understand the way that it works. And we have 5 members that actually have joined the board in the last couple of months. And of those, so in terms of the voting, the 3 who know the business the best and the longest actually voted for the Hero double option. And of the 5 new ones, 2 voted in favour of that and 3 voted in favour of another party. So after we started the board meeting at 7 o'clock in the morning and we finished at 10 o'clock at night, after that sort of 15 hours and all the inputs we got from a whole variety of advisors, we took a decision on a majority basis. Because it was in the interests of the company, the shareholders, the staff, and the patients that we move on. We've been on this process for too long, and that is why we want the management to start focusing on improving the performance of the business.
What was the choice of the other 3?
Sorry?
What was the choice of the other 3 members?
It was another party. I'm not going to get into the individual choice of different people. I don't think that's fair.
Excuse me, hi.
Yeah, hi.
I just wanted to clarify the Luthra investigation.
Yeah?
Did you say that the report is expected later in May?
Yeah.
Okay, when exactly is there?
Well, I wish I knew myself, actually, but we are in the hands of the lawyers.
Right now, Grant Thornton is doing an audit.
Grant Thornton is doing the forensics. You're quite right.
So what stage is it at?
Well, it's part way through. It's at an advanced stage, and we're expecting a report before the end of May.
Before the
Can we get a 2-minute interview, please?
Thank you, everyone.
Are we done? Okay, nice to see you all.
Well, that's the management of Fortis telling us about the bids and all those things that are under consideration. But you know, before we actually get an idea of what more is in store for Fortis, that's your stock out there. It's down as much as 3%. It hasn't really reacted to any of the developments we've had. Both the Berman Munjal combined speak to us earlier in the day, and right now, of course, we've also had one of the individual independent directors of Fortis Healthcare also talk to us about the consideration of the deal. They've said that it is the best deal that is in play right now, and well, they will seek and they will recommend it to the shareholders of Fortis Healthcare. Of course, we have with us once again Darshan Mehta, who's joining us to give us and fill in about what's really gone on and what he makes of Brian Tempest talking to us.
Yeah, so basically what the deal is that I think we were speaking about what they have to do and what was the reason for selecting it. Basically what they've said is that they were looking for money that will come in. They were looking for continuity in the management. So basically that addresses as far as the bids were concerned. He said that it was basically 8 members of the board, out of which 3 were the oldest members, which were part of Fortis for a long time, and 5 were new ones. So they're saying 3 of the oldest members voted for the Manipal deal. So basically I think the concern that they had was money should come in first, because I distinctly remember he saying that the concern that was that money should come into the company first and should not be with any kind of individual. So I think I don't understand quite, but it simply meant that they wanted money to come in fast. That was the key takeaway.
Darshan, tell me correctly if I heard this right. He also said that the Bermans do have experience in healthcare owing to the hospital that they run. He did mention that.
Yeah, so they have. So they were saying that they have experiences, both Hero and as well as the Bermans. They don't have hospitals as such, but I think they have clinics or something. They have experience in running that, not a full-fledged hospital, but I think they are not. They are fine with that. What the money that they get in.
All right, so the next update, what we should be getting is probably on 22nd May, when 2 shareholders having a significant stake have requested for an EGM.
Yeah.
And the shareholder meeting, of course, will probably be in the next 30 days. That is what they had said. But their bid has been secured. the board's nod to take over Fortis Healthcare and are now bracing up to ensure that the retail shareholders approve their bid. Sunil Kant Munjal, the chairman of Hero Enterprises, and Anand Burman of the Burman family spoke to Bhanvi Arora about how they plan to go about completing this entire process. Bhanvi started off by asking about when they will actually get a response.
The next stage after this is approval of CCI and approval of shareholders. In our case, there are the only two requirements before the deal gets concluded and the funding comes in. And this process should take less than 45 days.
The release that was released yesterday does not state anything on SRL. So is SRL disinvestment still on the cards?
So far, we have looked at SRL only from the outside and from whatever public information that has been available. Once we get into the company and can look at SRL in a little bit more detail, then we will be a little bit more concrete in what we do going forward.
So what will be your shareholding post the fund infusion if your offer gets approval?
So we will have just shy of 20% shareholding between the two of us.
So are you
when I'm saying two of us, it's actually three of us, that Mohit and Anand amongst Burmans and ourselves. So it is three of us, but we are like one family, all of us.
Okay. What will be your strategy for the growth of Fortis, and are you committed to put in more funds post the deal, if it need be?
So we are responsible shareholders in all the enterprises that we've been involved with. Whenever there is a need and requirement, we have come forward and supported them in whatever way it requires.
Okay. How many board members are you getting now? Because earlier you had demanded 3, but in the release it stated 2. So how many board members?
It is 3, and the release also says 3. I think there's some mistake. It is 3. We've asked for 3.
Okay. Are you looking to change the current management of Fortis?
We see no good reason to change the management. We believe Fortis has very good potential. It is a good system which was set up with good quality assets, very good geographical spread, good technology and process, high quality of doctors and nurses. So we think it just needs support in liquidity, a calming touch to bring things to normal, and a governance system which will allow it to flourish and get to where it needs to. Okay.
So have you made provisions of any contingent liabilities if anything works against you?
No, we've not.
Well, that's of course Sunil Munjal talking about what can be in store for their bid put in and chosen from the board of the Fortis Healthcare. Moving across, let's just address some of the other stocks which are in focus today on the back of earnings, some strong earnings coming too. And let me just start off with Nestle, because we have seen a steady 10.5% growth on a year-on-year basis, and it's an operational beat certainly, where revenue is also in line. The real beat, of course, operationally is on account of the fact that it's one of the few companies which has actually seen a decline in raw materials costs, where your raw materials costs have fallen. Consequently, gross margins have expanded by as much as 300 basis points. And when you consider the raw materials cost as a ratio to revenues, that stands down to around 40% against 44%. Of course, this is largely on account of softer milk and milk solids with that prices. Broking houses, of course, in general are neutral to positive, and they say that the improving front-end supply chain for foods and affordability is the reason why we're seeing that surge in Nestle, and a turnaround story continues, and there are more tailwinds ahead. That said, there's yet another consumption company which also announced its earnings, Asian Paints, and that's also surging. In fact, currently trading at lifetime highs. We have Yash Upadhyay joining us to give us a snapshot of what the earnings have stored. Yash.
Thanks for that, Agam. So it was an operationally strong quarter for Asian Paints. Their revenues have grown by as much as 15%, coming in at about 4,483 crores versus analyst expectation about 4,420. The net profit have come in slightly lower than the expectation, but still a 4% growth there. The EBITDA is up 18.5% to 839 crores, while margins have seen a slight improvement of about 60 basis points, coming in at 18.7%. As far as gross margins are concerned, the higher raw material prices have had a significant bearing, and they have fallen by as much as 600 basis points there. The raw material costs have gone up by as much as 11.5% to 2,300 crore rupees, and as a percentage of net sales now account for more than 50%. The bottom line, as I said, was also impacted and came in lower. This was mainly because of two reasons. One being the higher tax provisioning and a lower other income element. Now their effective tax rate has gone up by as much as 500 basis points, while their other income nearly halved from 70 crores to 39 crores in the fourth quarter. The decorative paint business posted a strong double-digit volume growth. Now this was a number we were working with a 6 to 7% kind of a volume growth number. So this was a big positive, is why we are seeing that big move on the stock today. EBITDA margins improved slightly. This was on account of the price hikes announced by the company in the first quarter. That apart, the management commentary has been very bullish on the demand trend in the auto and industrial paint segment, and the home improvement segment too posted a strong 11.5% growth in its top line. However, it continues to remain negative at the EBIT level. But that apart, I think Titan also came out with their numbers. What do you make of their numbers, Agam?
Well, Yash, the numbers were actually good, and we all know we were expecting a steady quarter, and a steady quarter is what we've got, because we are looking at about a 12% growth on a year-on-year basis. The top line is below Bloomberg consensus expectations, but it's been a really, really good beat when it comes to operations, and that's the reason why profitability has come in line with expectations. When it comes to the jewelry segment, that grew 13%, again, tad below expectations, but the positive is that the company is looking to garner as much as 40,000 crores only from the jewelry segment on an annual basis in the next 5 years. Do remember, as of now, as things stand, a third of the revenues, or rather a third of your jewelry revenues are from the premium collection side and studded jewelry, and that's the reason why we're looking at that substantial expansion in consolidated margins for Titan as well. Eyewear and watches continues to remain sluggish. There has been, well, subdued growth for both these. In fact, we've seen a dip when it comes to both these segments for this particular quarter specifically. We're expecting gradual growth for both these sectors. Broking houses again remain neutral to positive. There are no concerns about the strength of the business. However, some concerns with respect to valuations, which remain rich. But moving on, we're also addressing what's happening in the banking space. So at the end of the fourth quarter earnings season, most of the private lenders have reported their numbers. The differentiating factor this time was RBI's new stress asset norms. Those buffered from the new regulations managed to report strong growth, while others took a huge provisioning hit. We have Shraddha Babla now telling us about the contrast private bank earnings in the quarter gone by. Shraddha, what details can you add in this aspect?
So Agam, like what we saw in the previous quarters, asset quality continued to be the dominating theme in this quarter as well. And if anything, the RBI circular on stress norms has only widened the difference between the performance of the corporate private banks and the retail private banks. So that clearly showed on the, with respect to the asset quality numbers. If you look at ICICI Bank, Axis Bank, you can see that the gross NPA additions just on a sequential basis were this high. And if you really thought that PSU banks are the only ones with a double-digit gross NPA ratio, well then ICICI Bank clearly seemed like it was giving a tough competition. Just 9.9%, just short of that double-digit number, is what the RBI circular did to some of these banks. On the other hand, if you see the likes of RBL Bank, Bandhan Bank, also earlier you did see HDFC Bank, all of them saw their gross NPAs actually falling down or reducing marginally during the quarter. So just how badly did that RBI circular hit some of the banks? In case of ICICI Bank, about 10,000 crores of gross NPAs got added only on account of that circular. Axis Bank said that the impact of the circular was very high as far as the NPAs were concerned. And then you also had Federal Bank, which said that as much as 75% of the corporate slippages came on account of that circular. So look at the kind of slippages in case of Axis Bank and ICICI Bank in this quarter, multifold jump what we have seen. Apart from the RBI circular, a part of it can also be on account of the watch list reduction that both these banks have undertaken. Axis Bank has nearly wound up their watch list, just about 400 crores or so remaining, and then ICICI Bank also saw a 75% reduction in their watch list numbers, and all of that also added to slippages during the quarter. Overall, power sector stress is also what both these banks highlighted. So fears of the stress in the power sector do remain. But as far as divergence is concerned, it's IndusInd Bank which reported a gross NPA divergence of about 1350 crores for the FY17 audit conducted by RBI. But they were able to resolve, upgrade or sell most of those loans. And hence, like we have seen with Yes Bank and HDFC Bank in the previous quarters, markets were only willing to forgive this and ignore this divergence because of the ability of the bank to resolve some of these issues. So NPAs do remain a concern in this quarter as well, and the valuations, probably the differential is here to stay at least for the few more quarters until we probably start seeing some big resolutions and recoveries coming in, and then probably you could see Axis Bank and ICICI Bank start doing better. But for now, private banks do win this round as well.
Well, so that's the story of asset quality. But Shraddha, how did the private lenders fare on several other factors that you have in consideration?
Agam, the performance and the story on the growth was the same, similar as well, because retail-oriented banks continue to see a strong double-digit growth, while corporate-facing banks continue to struggle. You had Axis Bank reporting a net loss for the quarter. This is the first quarterly net loss that the bank has reported ever. Look at ICICI Bank. They were able to report a net profit for the quarter and also a big improvement in the operating performance, but that was only on account of the one-off gains that they had from this stake that they sold in ICICI Securities. If not for that, we would probably have seen a big loss for the quarter. On the other hand, you did see some of the other retail-oriented banks doing extremely well. So that's the kind of differential in the performance that we have seen for some of the retail versus the corporate private banks.
Well, thanks for that, Shraddha. And with that, it's a wrap on this show. But don't go anywhere. Lots more lined up, so stay tuned in a Bloomberg Quint.